Our strategy is built around risk protection or risk mitigation within the portfolio. So we're looking to add risk to the portfolio during favorable market environments. When the market environments are not so favorable, we want to move to less risky assets.
How are you positioning yourself going into 2012, and how do you suggest that investors position themselves?
Well, and I'll answer the second question first. I think investors need to be very aware of risk. Going into 2012, we could see a nice rally. I think we're going to see definitely a trend develop out of this trendless market that we've been in 2011. I think a trend will develop, either positive or negative.
A big risk right now is Europe. How has that impacted your investment strategy in general?
It's been a big impact on our strategy, and for a trend follower like us, markets that zigzag back and forth and really are in a trendless environment, it's pretty difficult for us, to be honest with you. The good news is markets don't stay in those trendless environments forever, but it's that macro news of Europe that's causing those market reversals. The market wants to rally, but then a news event comes out, basically reverses the rally immediately, and the market's very sensitive to that macro and those news events right now.
How do investors deal with that? Should they just sit tight and, if you're a long-term investor, stick it out? Or should you try to play the swings?
Well, it's difficult to play the swings because the swings occur so swiftly, and that's kind of a mean reversion strategy, which works well in a trendless environment. But once markets do begin to trend again, that doesn't necessarily work quite as well. So I think you have to stick to what you believe in. As an investor, we strongly believe in trend following. We know that markets will tend to trend over a while and over time.
And what's your strategy to protect yourself from the downside?
Well, we have a very strict sell discipline built into the portfolio. So when we buy a security, and we typically buy ETFs, Lindsay, so when we buy an ETF, we have a line in the sand that we basically say, hey, once the price on that ETF pulls back to that line in the sand, we will sell it. Now, that line is a moving line, so as the security goes up in value, it'll go up in value with it, and that allows us to lock in profit, but at the same time, it allows us to mitigate risk.